Well, we got the unbelievable happening right now. Actually, this is true. I don't know if it's going to happen. It may happen, though. They're talking about negative interest rates. In other words, if you're holding your money in a bank, they're going to charge you to do so. How's that? Is that pretty good? Actually, they're talking about, it's actually the ECB, the European Central Bank, is considering a negative deposit rate to help stimulate the economy. This way, like you lower interest rates, you can't lower them anymore, right? How about negative interest rates? And the proposal is to actually lower the rates not too much once they get into negative territory. Do like a small negative interest rate so people won't get scared and pull their money out. But once they set that precedent, so they're going to charge you money to hold money in a bank. So how's that sound for gold and silver? Or anything else that has real value, no matter what it is, right? Negative interest rates, seriously talking about it. So what can I tell you, man? Unbelievable. You never would have thought that possible, say 10 years ago or 5 years ago. You would have never thought that possible, but they're seriously discussing that. Policymakers hope that the measure will cause the banks to lend money. The banks ain't going to lend money anyway. Ain't going to lend money anyway, man. They'll probably invest in the stock market or something. Actually, that's probably going to... Actually, what would you do? Say, that happened in the United States. We actually had negative interest rates. I'm laughing. Oh, God, it's funny. Ha ha. And, it probably wouldn't happen right away, but, well, if the Europeans do it, who knows? Maybe it's going to be everywhere. Because we've been talking about this potential bail-in like Cyprus. I don't think there's going to be anything like that. Hey, negative interest rates would do it, right? Gee, that would help. But where would you put your money? Go in the stock market? Oh, it's going to go straight to 20,000. You think so? Actually, far more than any kind of analysis out there that's more important to me is I keep in mind something I read a while ago. George Soros made a huge bet back in mid-August of 2013, bear bet against the S&P. Huge. I don't know. I've expected possibly that was going to play out in October when they had the budget crisis, the government shutdown, but it basically got resolved. But it basically didn't get resolved. It got pushed over to the beginning of 2014. So George Soros' bet, either he's holding on to his bet and playing patient like a cat, and it's going to play out, which is what I think. And, if you look back, when did the markets really correct pretty bad one time before? It was back in August of 2011 when the government had the crisis back then with the, the problem with talking about downgrading the debt and stuff. And actually, they were talking about downgrading the debt if they didn't freaking resolve it. So they basically postponed it for some months, right? 4 months or whatever. So in early 2014, it's going to come out again. I do think the stock market's going to go up to 20,000 eventually, but there's going to be a correction between, hitting 20,000 and now. So, let me put it to you this way: if you get caught in a trap and you're in stocks and you get slammed, and you had most of your money in stocks and you get slammed and you got trapped. Now, I wouldn't necessarily make a bet. Do George Soros' bet, but it might be a good one. I'm just saying he's dead. He did it. This guy knows what he's doing. He didn't get his money by inheriting his money. He's a sharp person, that's for sure. And it's reasonable too from a number of standpoints, because of the 6 Hindenburg omens I talked about. Which is the only time they had that was before the financial crisis of 2008, 2009. We've had the 6 Hindenburg omens, and the problem with the government budgets isn't resolved just yet, right? It's just postponed to early 2014. But if you get caught in a trap and you have stocks, don't panic sell. That's why you don't put all your money in one area, right? Same with silver. You get caught in silver, you're like, oh God, it's going down and shit. It's not doing too good today probably because of the euro. I mean, it's crazy that the euro, if the euro does bad, the metals do bad. It's not every freaking single time, but a lot of times that's pretty good. It's a pretty good, correlation. If things are looking rosy and the euro is doing great, actually, if you look back before in 2008, in early 2008, before the euro crashed and everything, the metals were doing, silver was up over $20 and stuff back then, and that was a big high back then, right? So who the hell knows? But it looks like they're talking about negative interest rates. So, I always think that, when you're talking negative interest rates, if they start it, if once somebody does it, somebody else is going to do it. And then you're going to be thinking, is it smart to hold cash? No! Is it, what are you going to do? Is it going to be, and if they say, there's a government crisis temporarily and the markets crash, they're not going to stay crashed forever. I mean, that's ridiculous. Let's not, but they'll have a correction, right? If the government is a government crisis in early 2014, it'll scare people out of that. So where they might go? Gold and silver. Now, another thing I want to point out, this kind of flies in the face of Lindsey Williams about his, insider elite oil information. This guy's just such a clown. Anyway, it says there's in the Bakken oil field, Lindsey Williams was talking about that, and he says that they're going to create havoc. He says the oil elite in the United States, this is what he said, that they're going to create havoc in the Middle East, bring the price of oil way to hell up to $150 to $200 a barrel, and then they're going to have all this oil in the United States. You're going to be awash with oil from the great Bakken oil field, and they're going to sell it to Americans at a real big high price. Now, first off, if the global demand is there for oil and it's going up, and even though the United States has oil, it's still going to raise the spot price for oil across the world. Now, it's illegal for the United States to export crude oil. They're trying to change that rule, but it's still illegal. But if I still say they'd have the Mark Rich phenomenon going the other way. Like Mark Rich, they imported Iranian oil during the embargo and stuff like that, and where there's a market, there's going to be a way that oil's actually going to get probably exported from the United States if it goes up to like $200 a barrel or $150 a barrel. Anyway, but I want to point something out. The Bakken oil reserve is in a major decline. So, I was looking at these forecasts. They're talking about, there was like these rosy forecasts talking about the United States was going to be the #1 oil producer in the world by, say, 2017 or definitely before 2020. I don't see how. I mean, I know there's oil out in Colorado and Utah and stuff like that in the national parks. If they really tapped into that, there's shale oil there. They're not going to do that, though. And actually, the Bakken Reserve is in a 63,000 barrel decline every day. Every day it's going like, so they're trying to drill. They're drilling more and more oil wells, and they're getting less and less return on it. So it's actually costing more energy to get energy. Now I know Australia has their big super find out there in the Arkaranga Basin, and it's 40 times of what Australia had for they thought it was oil reserves, and it's about as big as the Saudi oil reserves, are approximately about as big. But that's not coming online real fast. That's not going to come online real fast. So, maybe there will be a real spike in oil prices. And, the spike in oil prices is actually what's going to help your gold go up, too. Because mining operations ain't going to stay in business, even if they're running bare bones right now, because they're very energy intensive. It's like you could say, I'm not going to put any more money into capital for, exploration, drilling, not drilling, but, yeah, I guess they drill these test areas for, like, see what's in the ore, the assays, whatever the hell it is. looking for land, investing in more land, you know, doing environmental impact studies, and you got to do all this stuff before you open up a new mine. They could just be going bare bones. But when you're talking bare bones budget, operating budget, almost 50% of it is energy related. So, you know, say the price of silver is $20 or whatever the hell it is, right? And, you know, oil goes up to $150 a barrel due to a problem in the Middle East, and actually looks like U.S. oil is actually in decline. Steep decline. Ooh, yeah. I mean, what's that going to do to the mines? So, I'd say one thing. The spot price of actually gold and silver is going to probably have to increase a great deal. I mean, the writing's on the wall. I mean, I don't know it's not going to happen next week, but I think the one thing that probably will happen short term, that should have happened short term in October, is when they have the government crisis actually hits, you know, fruition in early 2017. And, you know, I don't know if this curveball is going to come out of left field, because this is the one thing I've always been wondering about that everybody doesn't know, because they keep talking about it for years on end. You know, is Israel going to strike Iran? And it looks like they're looking to do it. They're looking to do it. If there's a deal cut, you know, in other words, if they back off the sanctions, that's going to cause Israel to probably strike Iran. You know, that's what it looks like. I'm putting this out here not as a political commentary, but as a, you know, trying to determine what the future is. So if, you know, just take it as it is, you know. I'm not saying a political commentary, but I'm just saying that if the Congress increase sanctions over the will of Secretary of State Kerry saying, warning Congress not to increase sanctions, and you know the word is that they've already made a deal with Iran. So if they back off sanctions and allow them to go ahead with their nuclear program, the Israeli leadership's going to go strike Iran with, you know, they're already working with Saudis and, you know, the French and stuff. And, you know, looking at what's going on in the oil fields here in the United States, they're in steep decline. The price of oil is going to have to go way the hell up. What does that mean for gold and silver? Up a lot. Now, how high is high? You know, looking at Bitcoins, I'm beginning to wonder. I mean, it kind of tells me that silver can freaking go into some crazy bubble like that, too. Why not? I mean, it gets into bubble mode, you know. I know there's reasons for it, and yeah, they can explain to me, and, you know. Anyway, actually, the world can do without Bitcoins. You know, you can print paper. I'm not saying it's you know, I got to say this. I like the concept behind Bitcoins. It's just that it's gotten into so much speculation lately that I'm saying it's getting dangerous for the average Joe. If you got the stuff and you think you got a lot of money, I would be unloading it, but do what you want, man. I mean, I'm not out here to knock the concept. You know, if you've heard some of my other videos before about Bitcoins, because I'm like, man, oh man, these people are like, and that makes me think it really does add to my belief that it's in a major bubble, because, you know, the zealots come out like defending it like crazy. But, you know, you could do it without Bitcoins big time. And actually silver, if it got into some kind of bubble mania like that, they'll find replacements for it. But that wouldn't be as fast as doing without Bitcoins, you know what I mean? It would take a little while to do that. But it can get into mania phase too. A lot of stuff can. That's when you want to sell. But, you know, it looks like the old strategy now, everybody's telling you, yeah, hold on to the fiat money, hold on to the dollars, hold on to the euros, hold on to the currencies. Well, it looks like they're going ahead and going to charge you money. They're going to talking about it anyway, and they might seriously do this in negative interest rates. How's that, negative interest rates? In other words, they charge you money to hold the money. That's what they're talking about in Europe. But they're going to do it very small in the beginning. But you figure this. That's probably going to be, if there's going to be this bail-in like they talk about. You know, when Cyprus was on the radar with the news, and everybody's like, there's going to be a bail-in like this in the United States. They're going to take all your money. If they did something, it would probably be something like this, negative interest rates. It ain't going to be like, you know, 40% haircut or some crap. You know what I mean? God. But it would be negative interest rates combined with some probably serious inflation like Greenspan's talking about, over 10%, which might actually be more like real numbers of 20%, which is a hell of a lot, man. That's a hell of a lot. So, anyway, if you think gold and silver is stupid, do what you want. I mean, I don't know. I don't know for sure, but, you know, actually, you know, I wish I'd put $100 down on Bitcoins back in 2009 and had, you know, 50 or $80 million right now with Bitcoins, and I'd be buying precious metals with it if they delivered. I don't know. I'd be almost wondering about that deal, because say for instance I was the bullion dealer, right? And say you bought, like, you know, so many ounces of gold, silver, platinum, and palladium at, you know, $700 to $900 of what Bitcoins are worth. And now you're the bullion dealer and you're realizing these damn Bitcoins are worth, I don't know, 5 something. Would you deliver? I don't know, man. See, I got a feeling once the downside starts hitting on that thing, it can really downside pretty bad. Although I like the concept. I like the concept of silver better. And because, you know, anything electronic, it reminds me of the market of beast in a little ways, you know. And silver ain't the market of beast, you know. It's the moon metal. So, you know, physical metals, physical stuff, that counts, right? And, you know, when the mania hits, that's going to be the time to sell. But obviously the mania is going down. It's not even, we're actually on the mid-1970s correction period here as far as silver and gold go. And if you look back in the 70s, before it had its astronomical rise in late 79, what happened? What happened? They had a serious correction in the mid-70s, and really it didn't do nothing for a few years, and it went like a rocket. See, I'm thinking like in 2014, either it's going to hit like the hard around the just below 50 resistance, or it's going to go up to 72 to 75 and correct from there. And I think the big blow off top in silver is going to be around 2017. That's what I'm thinking now. And I'm not, you know, before in some of my earlier videos, I was more influenced by these other silver tards out there, but now I'm 100% going by what I think. And, you know, we'll see. We'll see. We'll see. But, you know, I got a lot of faith in the metals right now, because it looks like there's not too many options left. Not too many options left. After the stock market corrects, that will be a good option. I think it's going to correct because of George Soros. You got to thank George Soros for that, because when he makes a big bet and you know about it, I mean, don't read about it, you know, and forget about it. I know it was some months ago. It didn't play out yet. But when he makes a big bet like that, and there's a lot of reasons why he made that big bet, 6 big Hindenburg omens and a governmental crisis has been forestalled a little while, it's probably going to play out, you know. It's just not in the daily news right now, but what's in the daily news right now is they're talking about negative interest rates in Europe. Wow. I tell you what, man, that's getting crazier and crazy. That's one way to have a bail-in, right? Negative interest rates.